2025 has been a wild ride, hasn't it? From trade battles and surprise alliances to economic bumps that hit right in your bank account, global leadership calls shook things up for all of us. And for India, we made some gutsy moves on trade, built new friendships worldwide, and kept growing through the chaos. But as the year winds down, is the picture all sunshine, or do we have more work to do in 2026? Let's unpack India's economic story and how those diplomatic twists messed up with your wallet and your money. Let's unpack. Global relations kicked off stormy. Donald Trump stormed into the White House in January, testing our rock-solid India-US ties. April bought in the hammer, 25% reciprocal tariffs, then another 25% slap for buying Russian oil. That big India-US trade deal we all hoped for first, still stuck in talks dragged into 2026. But India didn't flinch. We doubled down with Russia and China. The SCO summit in Beijing, pure gold. Modi, Xi and Putin cracking up together, which ticked Trump off just enough to ease up and get negotiations rolling again with India. India and China resumed flights and cozied up with each other in terms of trade and policies. Oh, and in a total curveball, India and Afghanistan got cozy too. Their ministers popped over. We reopened the Kabul embassy with 2 diplomats in New Delhi, chatted on healthcare, and Afghanistan also brought in tax cuts and free land to pull in Indian investors. Trade-wise, those US 50% tariffs hurt, but we played it cool and patiently diversified like pros. Boom, there were 3 massive FTAs with UK, Oman and New Zealand. More in works with EU, Chile and Canada. Exports up 15.52% from November 24 to 25. PIB says trade deficit plunged 61.07% to $6.64 billion. Merchandise exports hit $38.13 billion, 19.38% year on year. Services at $35.86 billion. The winners: electronics first, then engineering goods, then gems and jewelry, pharma, chemicals, petroleum products and textiles. Now let's talk about the stuff that bites your wallet every day. Inflation nudged up to 0.71% in November. Blame veggies, proteins and fuel spikes. But it stayed safely under RBI's target. Food prices actually dipped 3.91% year on year. Veggies crashed 22.2%. Housing at 2.95%, core CPI excluding gold eased to 2.6%, and fuel, it stayed chill, no big shocks at all the year. GDP rode ahead Q2 July to September, fastest pace in 6 quarters, above 8%. Q1 April to June at around 7.3%. RBI bumped the full FY26 growth forecast up 50 basis points to 7.3%. From December, they also slashed repo rate to 5.25%, which was at 6.5% at the beginning of the year, and the cuts came over the year to end at 5.25%. Meaning loans get cheaper for home buyers and businesses like you, but fixed deposits, they are now paying less interest. And the rupee drama, well, that was no less than a Bollywood movie with massive twists and turns. Asia's worst performing currency, one of the year's biggest losers, flirting with 91 to the dollar. RBI jumped in over and over, but the calm never struck. Thanks to US tensions, $17 billion FPI pullout from stocks, RBI tweaks and more. Everyday pain was on pricier imports, oil, gadgets, overseas studies and trips. Top 5 trends that defined our markets, where India still being the fastest growing major economy, super low inflation and repo rates, IPO doubling last year's haul, locals propping up stocks as FPI's bailout, and RBI crediting manufacturing, construction and public capex for the growth wins. Now there you have it, 2025's India's economy in nutshell. Policies hitting home. Dive into markets and commodities in our 2025 recap playlist as we chase more growth ahead. And like, share and subscribe to ET Now for more such news and views.
If you like this video, then like, share and subscribe to ET Now.